All right, so today we have a good episode building off what we did the last 2 days. Well, 2 days there was no sound on it, so um, we'll just say the last day. And one of the things that we saw yesterday was a big jump in the market, and so you see right here, huge jump from about 144.6 to about 151. I mean, that's a $7,000 jump right there. And so I figured, okay, after that kind of day, a lot of it was built off of the NXTD stock that we own. So if we go down to, where's this guy? There it is, NXTD right down here. And so I figured, all right, there's going to be some profit taking, and more than likely, with some consistent gains, you can probably see a little bit of profit taking. So took a look at today, and we saw a little bit of profit taking, a little bit small down. I was looking at pre-markets overnight, and they were definitely down a little. So I figured that was going to be the case, and I thought maybe it might be a chance to buy something. And then I'm not sure what hit, but it went from 1,500 down to 6,600 down. And it's 7:20 a.m. I'm not up yet. So it's California. I'm 3 hours behind the market. And so I got up right around here, somewhere around there. So it recovered $2,000. And I said, all right, let's go do this. I was going to go make some breakfast. And I said, well, let's go take a look at the numbers first before we do breakfast. And so immediately I looked, and we saw some big opportunities here. So I wasn't really looking at 2 day movement per se. I wanted to take a look at the 1 day movement. And the biggest drop was NXTD. Figure is profit taking, so that's part of it. So we'll talk about that a little bit today. Fuel cell, which has gone down a little bit, went 17% down today. Texas Hospitality, again, they do um, food service and what would you call it? Hospitality, residences, blah, 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 accommodations. Thank you. For West Texas oil. And look what's happening in West Texas. Everything's frozen over. So I think people are overreacting to that. It went down 15% today. And then Future FinTech, the one that just really irritated me because I knew I should have bought it like a couple weeks ago. I didn't, and it just went up dramatically. So I saw a 13% drop in that. We said, okay, we're going to take a look at that as well. So let me just take a look at one thing, make sure. All right. So, and then, oop, movement right. All right. So with that being said, I did want to take a peek at the 2 day movement, and fuel cell was leading the way at 24% down. Texas Hospitality was 20% down. It went from 238 to 190. I had sold it before when I owned it at 203. So I was like, all right, it's below what I sold it for. So that's kind of good. Um, Future FinTech was down 16%, but of course, 13% of it was in 1 day. But 16% drop. I was looking for a downside on that. I didn't think it would come so quickly. And then Acre Residential, which is, or Acre, it's basically XAN. It's our old stock XAN. It's a commercial real estate REIT. It got bought by somebody else. They kept the stock, or they kept the registration on the stock market, but changed the ticker symbol to ACE, from XAN to ACR. So I thought, well, new management, so maybe they might be doing something different. I mean, you're not, if you're management in a company, you're not going to buy the company and do everything the same way they did before. There's no point in doing that. You do it because you see there's an opportunity where they didn't make enough money and you feel like you could do more. So I thought this is one I'm going to keep an eye on. So with that being said, we have some candidates for purchases today. So today we ended up doing initial. We did I did one at 22 for fuel cell. And if we look at fuel cell where it began the day, boom, where is fuel cell? Was it 22.13? I wanted to buy it. I thought it fell enough already at that point. So we'll buy it. So we put in a buy at 20 to 22. And since it went down so fast, so we'll look at, let's go down to fuel cell. All right, we'll open this guy up. So again, we put in an order for 22. We'll take a look at the chart. All right. And so it had already fallen past 22 when the market opened. So we bought it at basically 2069, which is probably somewhere around right here. Um, and then, and then all of a sudden I looked and it's like, I don't know, 19 bucks, something like that. And I'm like, all right, it would have been nice. Yeah, it was 1917 is exactly what it was um, when I looked at it. So I'm like, well, I probably could have held it for a little bit longer and then buy it, but whatever. But I saw that it continued to drop and it got down all the way to like over here to 1851. And I'm like, geez, I could even do another limit order and cut my cost basis. If it's a 2069, well, it got all, and I want to get down to 1775, 1750. And it got down to 1755 and went back up. And so I was trying to figure out when to buy it again. If it kept going up, then it kept going up. But I'm not going to chase it. But it got all the way down to 1755, and we ended up doing a second order. Oh, why am I doing that? We have a second order for 1875. So we basically got it. Where is that right there? 1875 or 1775? I want to say it's 1775. No, 1875. All right. All right. Oh no, you know what it was? I take it back. So we did another order right around right here, 1875. And of course, whenever I buy a stock that day, as soon as I buy it, it goes down, which is what it did. Um, and so, but at least I dropped it down from 2069 to 1962, which was kind of good. But part of me is like, man, if I just waited a little bit longer, and I was watching it, literally making breakfast, and I had these charts I was watching it every few minutes, it got down to 1755. So overall, I'm not too concerned about that. We did lower it down a little bit. It did go back up, um, and we'll get it back to where we want it to go. So with that being said, um, I guess if I would have been a little bit pickier and I saw it go down to 1755, I probably would have bought it then. And if it went up to 1770, I would have got it 1775. So whatever, that's fine. It's still going up. We're not buying it because we're expecting to be here in one day. All right. So with that being said, the next one we did was Future FinTech. So we'll take a look at that one. And this one we bought, basically started, take a look at yesterday, or take a look at, for those that haven't been watching, it was 168. And I did some research and found out that a bunch of people who were shorting the stock took away their shorts. So that made the stock jump up, went down. Probably some more shorts going in, probably people taking some profit on that. But it got up to 769, and then it kept going up all the way to 1017. And this is where I'm belly aching the last few videos. And then we looked at it over the last week. That's the 1055. And it kept going down, down, down. So I kept looking at it today. It was as high as 968, kept dropping, 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 dropping. Got down to 784, went up a little bit and kept going down. And I thought, okay, well, this is, I definitely want to get on it now. It's a good price. It's dropped enough. So I bought it at 8 and it bumped up to 811. Oh, and it's sitting at 8 right now. So basically the same thing that we have. So we bought that in. And Texas Hospitality, we decided we're going to keep that. The stock's sitting at 190. I just figured if it goes down, let's take a look at that one real quick. So Target Hospitality. I always say Texas Hospitality because it's in Texas. But Target Hospitality, we take a look at them over the last month. So it's sitting on 154, and I had already sold it at this point. Got all the way up to 254 and dropped again. So we take a look at it over the course of 3 months. You can see the big trend where it drops down, and I'm like, the trend line is very clearly right about here. So it's below our average trend line. If we look at it for the month, trend line is about right here. It's definitely below our trend line significantly. Like that's the trend line. Then we look at over the week, and it just kept dropping, dropping all the way down from 257. We got all the way down to 189 and kept dropping, dropping. And it sat at 190 for a while, bumped up. And I said, I don't need to buy this. But if it comes down to 175, then I'll put a buy in on that. So that's still pending. The other thing that we're going to look at was NXTD. And because you remember, if we talked about that guy, That one dropped 24% today, and it's muted. It's not even up the top because it was up 46%. Over 2 days, it's still the leading candidate, being up 23%. So, with that being said, it started off low, but it kind of kept low. There's no drastic movement on it. So I figured I'm not going to buy it yet. We have a cost basis of 141, but if I can get more of it, if it drops consistently again, I'll probably buy it again because I really definitely believe in the stock, and we're still pulling 72% after that pullback, even after that pullback. So, with that being said, I took a look at this market today, and it was buying day. The market generally went down about $5,000, but we have a big enough pot where that's not as big of a deal. We're still up $112,000, up 335%. But what we've done is with fuel cell and with future fintech, we've basically positioned ourselves to be in a really good place going forward. When the market goes up, we'll get some nice little gains out of that. So, with that being said, this is not really being rich. Anything we're talking about today, it's nice to make some money here and pay for things. But Fernando Tatis Jr., the most popular guy here in San Diego, one of my favorite players, if not my favorite, agreed to a 14-year, $340 million extension. So for those who are not mathematically inclined, 340 million divided by 14 is 24 million per year. The dude's 22 years old. So he's going to be locked up till he's 36. He has a full no trade clause. And I was joking with somebody. I'm like, now we can finally afford to live next to Manny Machado. So anyway, dude just got paid. Now it's time for you guys to get paid. Secondly, last thing we want to talk about before we head out is an interesting thing that came out in the news today. They basically did somebody basically put out a study or whatever, and they were comparing Florida and California because they have totally different approaches to coronavirus. California is the Democrat-controlled Nazi governor who's going to be recalled, who basically locks everything up, well, except for his own winery. Bet you didn't know that. That kept open, but all the other wineries got shut down. And then Florida, which is wide open, no state restrictions. If you are the Miami Dolphins and you want to have 70,000 people at your stadium, you can offer it. Doesn't mean 70,000 are going to show up. I don't think they will. But the government's not keeping you from doing that. Restaurants are wide open. Schools are wide open. Like there's literally no restrictions. And so they looked at it, and California and Florida had very different results, but they have nearly identical case rates. In other words, the percentage of people that get COVID, the number of people that are hospitalized in percentage, and the percentage of the population that have COVID that have died. So you say, okay, well that sucks if you're California, true. But what you got to understand is California is generally a younger, healthier state. I mean, not that Florida's not healthier, but you're younger and healthier. Florida, where I used to live, is full of old people, and it's a much much older state. And this is the state where we thought if coronavirus goes through, it's just going to rip through there. So they basically have the same results, two totally different policies, two totally different populations. Florida is actually, in a sense, they're fighting it with one hand tied behind their back because there are a lot of old people on there. So realistically, California should automatically have better results, and yet they don't. So what logic tells us is that it doesn't really matter what policy you take, whether it's draconian or not. It doesn't matter. You could be totally wide open or you could be totally shut down. COVID's reacting the same way. What it means is um, COVID's not being managed. It's not controlled. There's nothing that a state government can do to control it at all. Um, so what it means is people are going to start to see this, and they're going to start to push for their states to be open. And again, this is why we're investing, because we're buying low when the risk is taken out, and when things start to open up. And again, it's going to pop this summer, guys. You want to have your cost basis down. If it's the first time you're watching your video, we don't look at a lot of people. They look at current value, total gain, percent gain, and those are all nice. I mean, don't get me wrong. I love looking at this and seeing a 554% gain. Don't get me wrong. I do like that. But the most important thing that we do, and the people that make money do, is our big thing is driving down this number, the cost basis. That's the amount that you paid for the stock. So, and that's what happened with AMC and GameStop. If you bought GameStop for $10 and it went up to $483, you made a ton of money, right? Say you bought 1,000 shares, you made, you know, $460,000 roughly, $470,000. But if you bought GameStop at 300, you didn't really make that much money, but you do have some downside and you would be underwater right now. So the idea is you want to get that cost basis down as much as possible. And so if we buy stocks, as much as we might see a stock where, we'll take a look at one here, oop, where we look at, we'll pick one here, Blink Charging, and it dropped 7%. Well, let's look at 2 days, see if we have a more drastic example of this. Um, yeah, let's say Blink Charging at 8%. We're like, yeah, let's buy it. We can lower the cost. We can, get it cheap and we can take advantage of the dip. But the problem is our cost basis is 23 and it's sitting here at 48. So all you're going to do is raise the cost basis. Now, will you make money if the stock goes up? By all means. But I prefer situations where I have a cost basis. It goes in the red. I can buy it lower. And when it retreats up, we basically double our gains. So with that being said, we're all shooting for our $340 million 14-year contract. But in the meantime, get your investments in. This was a shopping day. This is basically, the day when all the coupons are in sale and every coupons are on and everything's on sale. And it's time to get going. With that being said, we'll look at tomorrow. And things are moving up a little. Pretty much break even, though. We'll take a look at it later as the day goes on. But the one thing that you want to keep in mind that's coming up that's going to be a huge, huge day for the stock market is since Congress moved away from this stupid, unconstitutional appeal of a guy who's a private citizen, you're going to see them start to move toward that 1.9 or whatever it is that I don't know, COVID relief bill is probably the best way to say it. I was going to say a stimulus bill. They're going to call it that, but a COVID relief bill. And you're going to start to see the markets go up. One, it's going to have at least $1,400 in individual payments per person. So people use that for stock market. People all the time say they throw it in their Robinhood account. So that's going to be more money for more stock, and it's going to drive the overall stock market up. And then secondarily, you're going to see a lot of enthusiasm in the market about that. But by the time you've heard it, it's too late. So make sure that you get your stocks in. Make sure you drive down this cost basis as much as possible. And when the stock market goes up, all you're going to do is scale your gains. So that being said, I will see you tomorrow.